Good morning to all traders and welcome to another Markets and Waves video. Today is the 13th of April, but we're here again, Stavros, Tousios, Head of Investment Research at Orbex, with another yet Elliott wave update. In today's video, we're going to have a quick look on the US index, the S&P, the US oil, silver, as well as pound, not in a particular order, but we're going to start with the US index. US index continues its decline the same way as we've been expecting for a while now. We still didn't get wave 5, which means wave 1 in the minor degree is not near its completion yet. So you can understand that the downside potential here is quite big, and we are looking for a fresh high, of course, as well. Fresh low, excuse me. Now, with that said, it looks like to me we've got an internal structure over here. And this, because that looks like an ABC, it could turn out being a flat. So we've got 1, 2, we might get another leg on the upside, yeah, because we do get a tiny bit of a false break here, and then continue lower for wave 1. But I don't really think that wave 1 is really going to end down at 91 or so. If we take the double bottom as double top over here potentially, yeah, as a guide, then we're probably looking at wave 1 to end around the 91.50. Okay, it could get down to 91.28 as well, but considering that wave 1 as well is only tiny, it could be a case where we're not going to see that going much lower than the previous low, to be honest. Just a false break for wave 5 as well. So anywhere between 92 and 91.50, I would say, is where I would be expecting minor wave 1 to finish. Then a correction would be expected. Now, I wouldn't be surprised if this is 1, 2, 3, 4, and 5 over here. We ended minor 1, and this is part of minor 2, yeah, over here. And then we'll continue lower. But given the potential to the downside here, we will want probably wave 1 to finish lower than, in the minor degree, it would finish lower than up here already, because that means that wave 3 would have to be very, very extended. Now on the pound, we have something similar here. 1, 2, 3, 4, and 5 for wave 1. We see an A, B, NSC, which means an expanding flat was probably completed down here. And what I see currently is that we've just done wave 1 and 2, and we're moving down impulsively for wave 3. We're going to get 3, 4, and 5, and I'm looking at this to be an internal structure, obviously. Then we're going to get 4, and then we're going to get 5. And I'm looking at this 5, excuse me, to end down around the 133.81, because this is the 161 extension of waves. Well, this is, the first wave in the minute degree, and then the green 2 correction in the minute degree again. So 133.81 is the medium term target, I would say. In the short term, I'm looking for a decline below the previous low, and then get into at least the 135.88 as a first validation that this indeed going to continue lower, because as you will remember, it could be a case that this is an ABC and we're going to move higher instead, the alternative scenario. Let's go quickly on oil. Oil has been boring, and when oil is boring on any other market, it means that we're in a complex correction, most likely. Now, we talked about W, X, and Y here. We talked about other patterns as well. But to me, and due to the structure that we currently see, it could be a case where this thing is now all turning like some sort of triangle. Yeah, it really reminds one. Unless if we get that move on the upside now, and we're going to go like above 62 or so, like that is like the X, and that is 1, 2, some sort of 3, 4, and then 5. But that again would be, yeah, W, probably be something like W, X, and Y in here, in Y, or something like that. which will increase the chances of that becoming a W, a triple zigzag as well. That's why I'm more keen and more favoring a scenario where this is a triangle, which means we might not even see a new high, yeah, because we've got the A, the B, the C, the D, and the E, supposedly, yeah. It could be a case, of course, that this is the B indeed, this is the C, and then we're going to get the D and then the E, and then we're going to start moving lower. Yeah, because we don't really see prices here unless if we do that and we exclude this because it's not really part of the rejection for the triangle anyway. Either way, this is what I'm looking at this particular stage, and I will be expecting then another leg on the downside near the 54.80 also for wave B to be done. Now quickly on silver, and then I'm going to have a quick look at the S&P as well. We did say that in case we move back within this ending diagonal, things will become a bit more complicated. But don't forget that we've moved impulsively up and we're just looking for a correction. I would personally not be worried even if we go down to 61.8 because the first wave starts over here, yeah, at 24 rather than 25.60. That's 24.60 is 24.17. Now that doesn't mean we're not going to go lower. It just means that, you know, more chances that, you know, we are going to perhaps bounce at the 61.8 because it's the golden ratio. To me, this looks like this is an A and this is a B. And then we're going to get the C. The C is a bit more clear. That is an impulse, right? So we are expecting another leg down. I expect another leg down to clear this high, perhaps, and then start moving higher. In case we break below the 61 and the previous low over here, which is also the high for wave one, then things will become a bit more complicated. It will be a case where it's probably an ABC or something, and then we're going to get something like 1, 2, like 3, 4, 5 for A, then we're going to get B and C. Okay, that's for silver as well. And last for the S&P, it just continues with an upside momentum. Last time we talked about breaking of the 4100s and then the move up to the 4166, which is likely to happen. We've had waves 1 and 2 done, and we are moving. It's a multi-structure move on the upside in wave 3. So we can get wave 3 anywhere between 4160 and 4220 or so. Okay, since we broke above that level, now we just need to look at the 4100s for support rather than anything else. Don't forget that this is seen as an impulse because to me it looks like it's impulsive, and I'm going to get an impulse in the last fifth wave. But it could be a case, don't forget that this is going to be all of it, you know, is going to be some sort of you know, ending diagonal. So we'll have to really stay above the 39.83 in case we get some sort of big correction, okay? Because that will be the level that is going to change the structure that we're currently looking. So guys, this will be all for the day. In case you do have any questions or alternative scenario in mind, do not hesitate to leave a comment on our YouTube section. And we will speak again tomorrow.